So I fully believe that one funded account can change your trading career for the better, but you can't just rely on one account to become a full-time trader. And I'll go through some stats here that I've thought of in the process of actually making this video and coming up with the points for this video on why I think that just going to one funded account is not the way to become a full-time trader. However, you can definitely start the snowball effect, put it into action for your future as a full-time trader, if that is obviously your overall plan. And if you are looking to learn how to trade, learn how I trade, learn how my mentorship members, around 700 people learning how I trade, speaking to me on a daily basis in my Discord community group as well, then be sure to check out the mentorship in the video description and learn how I trade there. So I'm going to go through the start of my journey quickly and how I actually ended up making tens of thousands of dollars from trading, in months at a time. And we're going to start in 2021. This was the first time I traded with a prop firm. It was the first time because that was the year I turned 18. I obviously could not trade with prop firms until then because, you can't sign up. So I had to wait until 2021. And in March, when I did actually turn 18, I signed up for a prop firm challenge. And did I start immediately with 200K or 400K? Absolutely not. Started with a $25,000 account and I traded this. I wasn't focused on making as much profit as possible. I was just focused on getting my refund and getting a payout. This prop firm did actually shut down midway through my funded account stage. So it didn't give me a good kind of idea of how I should trade with prop firms, but I did get a payout. And the payout and the refund made it so that I made money from this whole process. And that gave me money to then increase the account size I was now looking to go for. So instead of continuing to trade with that one prop firm, I then had to use that money to trade with a different prop firm and pass the challenge all over again. So that is what I did. But this time I increased the challenge size to £70,000. So obviously a little bit of an increase there, but it meant that it was basically risk-free because of the profits I'd actually made on the $25,000 account. At this point, I was obviously quite young. I hadn't made hundreds and hundreds of thousands of dollars at this point. So I wasn't looking to get one funded account that was going to change everything for me. I used the one funded account to move me on to the next stage, which then gave me access to more capital. And it meant that 5% profit then goes up to, it changes from a few $100s to a few $1,000s. And this is obviously the process that you actually want to go through. You don't want to just jump in, go straight into the deep end and start trading a large account. You obviously can do this if you have the capital, if you have the confidence in your strategy and your trading plan. This is obviously a route you can take. Do I recommend it? Absolutely not. Have I seen it work for many people? Definitely not. I see many people that try and do this end up basically feeling the pressure of the large account size, and because of their lack of experience in the markets, their lack of experience with large profit numbers fluctuating on their MetaTrader, it just ends up getting to them and they end up making mistakes. So if you work your way up, going from seeing hundreds to thousands and then tens of thousands and maybe even hundreds of thousands of dollars, as long as you're working your way up slowly, that is the best way to actually do it. And it always starts with one funded account. The reason I say one funded account is because the vast majority of traders watching this video or watching any content online, you probably won't have multi six figures in savings to trade with once you have a profitable strategy. You're going to have to rely on prop firms and kind of utilize them to fund your other trading accounts or your personal trading account. This is what I did. This is what I still do to this day. I only use prop firms to fund my personal investments, whether this be property, stocks, index funds, my trading account. This is the main purpose of prop firms. But that wasn't the purpose at the start of my journey. And as you're watching this video, you want to know about the start of your journey too. So when you get your first prop firm challenge, your main focus should be to get your refund and any profits. If you make profits, that's good. It shows your strategy is working. It shows you can pass challenge phases and then trade the funded account. What it also shows is that you have discipline. I personally think that prop firms instill discipline more than a personal trading account. The reason being, on a personal account, you have no drawdown limits. You have basically no rules at all, apart from a margin. If you breach your margin, then you will have a margin call and they can stop out your positions. Whereas with a prop firm, if you end up getting to that stage, then you probably already hit your drawdown at that point anyway. So you can only lose 5% in a day or 10% overall. So it does limit your risk, which is a great thing that will help a lot of people. One of the most common mistakes traders make is over leveraging. So if this is able to kind of discipline yourself by trading with a prop firm challenge, it can then instill confidence that I don't need to risk loads to make money. Again, it will help you in your personal trading too. And then you also need to think about the fact that the risk just isn't really there. Because once you've got that first payout and your refund, it's completely risk-free. Worst case scenario, you make a profit. So then if you use those profits to invest in a larger account size, whether it be 25K to 50K, then 100K, then 200K, scale up like that, obviously probably the best way to do it, then every single time you scale up to a new stage, that challenge is then risk-free because you're buying it with the profits from the previous stage. And this basically means that in the back of your mind, you're not attached to that money because your bank account hasn't gone down to purchase that challenge. And a lot of the effects that traders actually feel is the money they spent on the challenges, the money they have in their trading account. So if this is eliminated by the fact that it is completely risk-free because you're buying the challenges with profits, then again, it can help your trading psychologically, which then makes it easier to follow your plan on the technical side of your trading as well. And then once you are able to scale like this, you will get used to trading multiple different accounts, multiple different brokers, multiple different risk parameters all at once, which will make you far more professional than the average trader who just tries to trade with one prop firm account forever. And that's why I say the one prop firm account isn't the key, but it is the catalyst for your future trading success with multi-prop firm, multi-accounts, whether that be personal, investor capital, or the funded accounts that we all trade, the retail ones. And you've probably seen online, traders seem to prioritize prop firms a lot recently over the past few years. And the main reason why this actually is because there's virtually no risk. If I want to trade with $100,000 of capital, it would cost me £450 to purchase a challenge. If you then make 10% profit, you've made $10,000. Whereas if I want to make $10,000 from a £450 investment, as you can imagine, I need to make a little bit more than 10% profit. So as a trader who has cash that I'm basically eager to invest, I can invest it into a prop firm. And even if I fail, obviously that is a possibility. Even if I fail, I know that the risk to reward of passing a prop firm and then getting a 5% or 10% payout, or even maybe 10% over a couple of months, the risk reward is there. £500 for a challenge, 10K payout, it's a 1 to 20 risk to reward, and it would be a very, very nice risk to reward as well. It's going to beat any money you put in the stock market. It's going to beat any money you put into a savings account. And the best part about it is you get refunded anyway. So if you do focus on learning about your strategy, creating a plan that can actually pass prop firm challenges, you don't want to go into the markets expecting to pass a challenge in the next month if on your strategy's data over the past 4 years, you've never made above 15% in a year. You can't then go and expect to pass relatively quickly. That is just not going to be the case. So you want to take it slow, trade your plan, change nothing, and keep it exactly the same for the prop firm challenge, and that is how you will succeed. Don't go into it expecting a different result from your normal trading just because it is a different account, just because there are different trading parameters. This is not going to be the best way to trade them. So the best advice I've always heard from the best prop firm traders is they have capital where they're willing to risk that capital, whether it be 5K or 10K, and they will invest this money into their accounts, their prop firm challenge pool, if you would say, a pool of accounts or challenges all at once. The main reason they do this is that it gives them the opportunity to risk more to pass quicker. If you are a full-time trader and you have a lot of capital, you have other income, it is probably a good idea to actually do this, to maybe risk 2%. Back in the day, you used to have to risk 3 or 4%. As you guys know, I used to be quite fond of doing that in 2022. Very tricky to do that now with the majority of firms. They are very strict on their risk parameters, but that's completely understandable, and it probably makes them more sustainable in the long term anyway, which is what we all desire. For the beginner trader watching this video, focus on that small prop firm challenge, pass it, build up your confidence, build up your capital, and then scale. Once you have money, then scale. Don't scale prematurely. It will end in disaster, and then you'll regret doing it in the first place. And if you did want to add anything, be sure to comment down below. Check out my mentorship, and I'll catch you guys in the next video.